Hello, this is Minghan here. Disclaimer that this is not a buy or sell call. Content is purely educational and can be found online in books. Today I will be talking about the overall Singapore market before I dive deeper into the Parkway Life REIT. Before we dive into valuation, like how I did with Capital Escort, I like to share about the STI before we move into the REIT. So in the SG market outlook video, we talk about the SG heartbeat indicator reaching the 20 level. So looking at the chart here, you can see that the blue line has reached the oversold level and the red line seems close as well. Ultimately, price is what you pay, and the current STI ETF price is on its way to 3.2 as anticipated. As traders and investors, we know we cannot be right all the time, hence we need a framework and a methodology to monitor the markets. With that said, I really want to see price go to the $3.20 area and the SG heartbeat indicator in the oversold region turning up and give me the confidence to consider my potential candidates. Higher interest rates impact REITs who are operating on borrowed funds. REITs will need to pay more interest, in this case, resulting in lower valuation of REITs. Let's take a rough look at a few REITs and observe their relation to the SG interest rate. So I'll add in the SG interest rate. On a bigger picture, so I have a list of REITs over here. From May 2022 onwards, REITs has been rising steeply, and you can see that CapitaLand Escort has been coming down as the interest rate increases. CapitaLand China, Mapletree Industrial Trust, Fraser Centrepoint, Cromwell REIT, as well as Parkway Life REIT. So from an investing point of view, I like to share more about this Parkway Life REIT. Parkway Life REIT engages in the business of investing in investment properties in the healthcare sector. So let's take a look at some of their fundamentals. Looking at their financials, we can see that the revenue and operating profit is positive. So let's take a look. You see, this is the revenue. And you can see the operating income. These are positive. What interests me is the increase in the distribution per unit. So if you move on to dividends, you realize that the dividends even during the COVID period is rising. So this is what actually interests me because it's very different from the other REITs. This tells me the resilience of this business. Humans need healthcare services and owning the properties to facilitate such businesses is stable, in my opinion. With the interest rate in mind, no doubt interest expense will be high, but Parkway Life has a high amount of free cash flow. So where can we see the free cash flow? We just go back to statements, look at this cash flow. And you can see that the free cash flow on an annual basis is here, 90.2 million. 90.2 million. Its interest coverage ratio is about 15. This means Parkway Life can pay off their interest expense 15 times over with their free cash flow. With that in mind, what are the key levels we can consider? I will use the price to book indicator to decide. If you like to know what the line represents, you can watch my previous video on CapitaLand Ascot Trust. Now let's move back to the chart. So this is Parkway Life Reit, and now let's look at the price to book ratio. Most of the time, prices are above the 1 standard deviation fair price, which is the red line here. Hence, I've added another red line. It's a thicker red line here in this case. This is actually the 10-year high price to book ratio multiplied by the current book value per share. Notice the prices get resisted at these levels over the long run. Here, and here, 20. So the market participants know that this is a good REIT and hence they always price it at a premium. Seldom does it trade below the 1 standard deviation. With high interest rates in view, it will be prudent to consider entry at much lower prices. This is also confirmed by the falling prices. My personal preference is to enter in different price levels. At the blue line, which is the median fair value, which is 372, probably many others are also looking at this price level because at the same time, you realize that it is a technical support area. When is the price touched in February 2020, so resistance, it broke above, coming back down 2022 October, came back down 2022 December, stay above, and now it's back in May 2023. Another level to consider accumulation would be 1 standard deviation below at 328. For the past 10 years, only once did price touch the green line. Hence, it would be considered a very conservative level at 3.28 to consider accumulation. So zooming out to the weekly chart, you realize that for the past 10 years, in March 2020, during the COVID period, that was the time it touched the 1 standard deviation lower. I hope through this sharing, you gain some clarity on entry planning and some metrics on how to assess the REIT. Thank you and have a good week ahead.